It's Gregory Group Real Estate. As we wrap up this year, I'm sitting here mid-December, beautiful Austin day. You can see I'm in one of my favorite spots here to stop when I just need a little bit of fresh air. Right along Bull Creek, right off the freeway. You can see we've got a nice little waterfall in the background, trees, hills. Couldn't be better. So what I thought we'd do today is wrap up the year, tell you a little bit about where we've gone as a market, maybe the economy as a whole. And recently went to a talk by Mark Sprague, one of the well-known economists here, and got a lot of notes from that. So what I'm going to do is start kind of on the bigger global level and work our way down to where we are economically as a country, back down to our market, and then we'll finish it up with a little bit of predictions about what the markets might look like in this next year. So first, economy around the world, there's no doubt about it. It's been slowing up a little bit here, and really there's a couple reasons for that. The U.S.-China trade war it's a pretty big deal. The tariffs that are out there, they're making imports more expensive, and really just the vast majority of the stuff that we use here in the country, most of it is made in China. Even if it's a brand we love, local brand, almost all of it's made in China. And sometimes even when it says it's made here, the parts are actually made in China, and it's put together here. So that trade war makes a big deal to all of these companies and what they do. Also, I'm sure you've kept up with the news, but our friends over there in the UK, they're going through a lot of turmoil with the Brexit votes that have been going on, and of course a lot of Europe and Asia have their own issues. Here in the U.S., we did get a little bit of stimulus from some tax cuts back in 2017, but a lot of the evidence is showing that the stimulus from that has pretty much faded, and we're back to the normal. Overall, in terms of GDP growth, and let me remind you what GDP is if you don't remember, but a simple answer to that is just GDP is what you get if you add up everything that we produce in this country. Whether citizens make it, whether foreigners are making it, but if it's made here in a country, it goes into our GDP. So the bigger the number it is, that means the more economic growth is going on. For the U.S., we had about 1.9% growth, which is predicted for 2019, which is a little lower than it has been. In the past, 3 to 5% was considered a good number, and over the last 7 years, we've averaged 2.3%. So overall, it's just a little bit of slower growth altogether. This next year, they're predicting 1.8%, which is a little bit less than we got this year. Our national job market still very strong. We're historically at one of our lowest points in unemployment, and we're right around 4%. One of the issues is that even though unemployment is very low, the economic growth that we've seen in this country, it's just really uneven. It isn't spread across the country. It isn't spread across different how much people are making. What's happening is that geographically, 80% of the job growth has happened in 0.1% of the metro areas here in the U.S. Think about how small of an area that is. So much of it is concentrated in some of these big metropolitan areas. So the huge part of the country is just not seeing a lot of benefits. One thing to note, there's been a lot of tax benefits that businesses have gotten from some tax code changes, and they've helped the businesses a lot to save a lot of cash. I think one of the big points of these things was they're supposed to promote expansion for them to create new jobs, grow their businesses. But what's happened instead is that a lot of businesses have been using these savings to give money back to the shareholders in terms of dividends or other ways of giving that cash back, which of course doesn't benefit your average Joe that doesn't own a lot of stock, or they've kept it in cash reserves. But the money that was supposed to trickle down to everybody really hasn't done so. When you look at how Texas is done, Texas has been stronger than our country for a while, and 2019 really wasn't any different. In 2019, our GDP growth here was 4.7% versus, like I said earlier, for the country it was 1.9%. So we're doing a lot better. Energy, we've had some rough time in the past couple years with oil prices, but it's stabilized a little bit. So energy did better. Healthcare, business, professional services, those have all been very strong here in Texas. In terms of home construction, the single and multifamily home construction, it's been down. It's not that they aren't building, but they just can't build fast enough because one of the big things is labor shortage is a big problem, and cost of the raw materials has gone up a lot. Look at our Austin market here. We are up 4.5% over the last year when you look at the median prices of single family houses sold in the city of Austin. So that median price has gone up to 410,000. Last year it was 392,000. On the Austin Board of Realtors area, so the whole kind of the big spread out Austin metro area, they're up 1.6%. So we're up. The growth has slowed a little bit from what we've seen before, though. Mortgage rates, if you look back at some of the stuff we talked about last year, all the economists were predicting that mortgage rates would be much higher at this point. They thought it would be 5.5% by now, at least 1 point higher than what we were seeing last year. But in reality, it just never happened. We're still close to the lows, and we're hovering somewhere around 4%. Sometimes it's a little bit less, but around 4% is what we're seeing, which is close to historical lows. Here are some predictions for this coming year in our real estate market. Of course, one of the biggest things that affects prices are mortgage rates. Understand that if mortgage rates go up 1%, that cuts the buyer's buying power by about 12%. So mortgage rates are a big deal. Good thing is no one's predicting that rates are going to go up this year. They think they are going to go up, but it's probably going to be a little bump. Maybe a quarter, half point at the most. And we might be sitting here next year with a 4% interest rate again. It's just not going to be a lot. Relative strength is a huge thing. Relative strength is something I learned a lot about in my prior life as a stock trader. But what that means is, sometimes you can't predict how the whole market will do. Of course, if something bad happens in the U.S., Texas is gonna be affected. Austin will get affected. But what relative strength is how we sit compared to the other areas. So here in Texas, and especially in Austin, we have a huge relative strength. We have a super strong job market. We're creating many more jobs than the country is overall, and Austin especially. Because of that, demand here, it will only go up. We're still seeing news all the time for companies who are building either extra offices here in Austin or moving headquarters to Austin. So demand is only going to go up. They are working to increase supply, but for single family housing, you can't build it anywhere. You can't build a big new neighborhood with 1,000 houses in the middle of Austin anymore. All the land is taken. For homes to be built there, you have to take one down to put one up. So the places where they're building it are a little more in the north, northeast, and southeast. This is where a lot of the new planned communities are going to go up, and some out west towards the lake as well. So supply, we're going to have more homes, but it just will not be fast enough to keep up with demand. So really overall, the number of sales is going to be lower because there's just not going to be enough supply out there, not enough homes for sale for people to buy. And overall, we're most likely going to see price increases again. I'm guessing that it will be slower. If we're up 4.5% this year, I could easily see it just at 3% or 3.5%, which would be healthy. You don't want it to keep on going up in a straight line, and at some point, as the prices go up, affordability becomes an issue because the higher the price is, wage growth, people aren't making money, aren't getting raises fast enough to keep up with how fast the prices of homes are going to go up. So we will see some slight increases. Long story short, 2020 will likely continue to be a very strong year. Let's do what we can. Have a great holiday, and we're going to have a great year. Once again, I'm Greg Tran, Gregory Group Real Estate. If you have any questions about the real estate, thinking about buying, selling, thinking about investing in real estate, just reach out. Happy to talk about anything that can help you. Bye.